And for HydraFacial in particular, I think that is it's a fantastic business that's really kind of at the center of both, Michael and Mai's worlds, where you're talking about a company that really is best in class in engaging with consumers, in providing them the, treatment that they want, the results that they're looking for, but packaging it and engaging with them in a next generation way. They're using social media. They're connecting online. They have unbelievable engagement one-on-one directly with their consumer, but they also have, a true device that provides a highly effective solution to a need.
Hello and welcome back to the Technology of Beauty, where I get to interview the movers and shakers of the aesthetics business. Today's show is quite unique. We get to interview some investment bankers who are in the beauty business. They're in aesthetics. With us today is Sasha Radic and Michael Robinson. Hi, Sasha. Hi, Michael.
Hi.
Thank you so much for coming. These people are investment bankers for the bank Jefferies, and they are in our space, and they're going to share a lot of things with us today. So, Sasha, tell us a little bit about yourself, please.
Yeah, thanks for having us. First of all, really excited to have this conversation. I work as a senior vice president in investment banking at Jefferies. I cover all sorts of transactions. My charge really is to help companies in the beauty and personal care space return value to shareholders, whether that's through strategic M&A, whether that's through IPOs, whether that's through follow-on equity offerings or leverage capital markets. We're here to support them as they kind of determine their strategic alternatives. I've been at Jefferies since 2013. Have been lucky enough to work on some of the biggest transactions in beauty across skincare, across aesthetics. The most recent one with Michael on the HydraFacial sale to Vesper. I'm sure we'll talk about it significantly during this conversation. But yeah, it's been a real pleasure working in a hugely dynamic industry and helping to support some of the most interesting and dynamic entrepreneurs that I've seen tackle industries that are changing incredibly quickly, and how they can help align their businesses with how consumers are interacting with their products and how the distribution channels, as they change, how they can best position their products to take advantage of them.
Well, thank you. How about you, Michael? Tell us a little bit about yourself.
Brent. So I'm on the medical device side, so I head up the medical device banking practice for Jefferies globally. So my involvement with aesthetics is on the medical side, which primarily means aesthetics companies that either have an energy-based device or companies that make implants, like Establishment Labs, all of which are regulated by the FDA. So that's kind of the difference between Sasha's world in my world. Aesthetics has been an important part of my business for years. I've been a medical device banker for over 25 years, but it's not all of what I do. Obviously, there's a lot of medical devices that aren't aesthetics, but it has been a space that we've been fairly active in over the years.
And can you tell us about who some of your clients are? Or recent transactions you do? Yeah.
Yeah. Well, I go way back. So, I took a company called ESC Medical public in the mid-'90s. That was Shimon Eckhouse. I'm sure you know Shimon. Great.
Yep, I do.
Yep. So that was probably the first one, and I think that was the first IPO of an aesthetics company. Actually, it must have been. So we worked with Shimon for a number of years. I sold coherent lasers to ESC. That became Luminous. Luminous, ran into kind of a tough time for a while. They went private, if you recall.
Yep.
They came back public about 7 years ago. We took them public at that time. So a lot of transactions with those guys. We took Sisram public, which is the old Alma lasers. There's still markets under Alma. Took them public in the Hong Kong market. And then most recently, as Sasha mentioned, we were fortunate to work with Clint Cornell and his team, and I know you know Clint extremely well, on the HydraFacial transaction. So that's kind of it on the energy side. And then on the surgical side, it's more or less been all around breast implants. So worked with NuSil, which is the company that makes the silicone for 90% of the breast implants in the world, and Establishment Labs with Juan Jose Chacon and his team. Took that company public and did a follow-on for them last year.
And how about you, Sash?
Yeah, so a couple of transactions that I've worked on more broadly in beauty and personal care in aesthetics. I think the most recent transaction has to have been the HydraFacial deal with Vesper. We helped sell Elemis to L'Occitane. That's a kind of luxury consumer skincare brand. Sold Morphe to General Atlantic. That's a cosmetics company that's really targeting Gen Z consumers and doing really interesting things with social media and influencers to grow their platform. Have worked with, most recently just sold Charlotte Tilbury, a luxury cosmetics and skincare business, to Puig, and then a couple of deals in the supply chain that touch that space. So have helped KDC, who's one of the big co-manufacturers in the personal care market, have helped them acquire other companies, HCT, Zobele. So that's been my charge the last couple of years.
Interesting. So before we get to HydraFacial, I'd like to know from each of you, what are some of the trends you're seeing in the aesthetics market and the professional skincare world?
I think.
Go ahead, Sasha.
I think there's been a couple of things that have been happening recently, and I can speak more to the topicals end of the spectrum, and I'll leave Michael to speak more to what's going on in devices. But from a professional skincare perspective, I think it's been a really interesting shift in the marketplace over the last few years. If you think back 10, 15 years ago, when a woman was looking for advice about a skincare regimen, she went to the counter at a department store. She'd go to Neiman's, she'd go to Saks, she would talk to her counter saleswoman, she would get a facial at the counter that would provide her, with the products that she needed for the concerns that she had with her skin, whether that was, anti-aging wrinkle cream, moisturizers, etc. What has happened over the last number of years, as the department store has really been intermediated by a number of factors, by specialty retail like the Ultas, the Sephoras of the world, by social media that's been providing a lot of that education outside of the counter. The department store has really lost that hold on the woman across the counter, and in doing so, in that not being the forefront of kind of education, that relationship has a little bit collapsed. So a woman who's still looking for results-oriented skincare is now no longer going to the counter, not going to the department store to get the information that she needs. And that saleswoman has really left, looking for greener pastures. Maybe it's online on Instagram, et cetera. So what has happened, that education process continues to occur, but now it's no longer happening in the department store. It's happening in a spa with an esthetician. It's happening in the dermatologist's office with her dermatologist, who's providing her with the education she needs, the support, and also with much more specialized products. I think what's really happened over the last couple of years is that focal point of information, especially in more results-oriented skincare, has shifted from, luxury department store products to more medical professional skincare that's being given to the consumer through the lens of an esthetician during a facial, or is being taught in an educational forum via like a YouTube tutorial. something like that. So it's actually a really interesting and dynamic time in the professional skincare market as kind of the intermediary for information and education changes. And I think that's allowed for professional skincare brands to really rise above where they were in the mind of the consumer, because they now have so many more focal points and they have so many more ways to access the consumer that they just weren't able to penetrate before, because they have access to the esthetician, they have access to the physician, the dermatologist, and that's really kind of the new mechanism for providing information. What's happened most recently in COVID, I think, has been incredibly interesting for professional skincare, as people weren't able to go in for treatments, but doctors, estheticians, they still needed to maintain a recurring revenue stream. And so I think kind of going forward, there's going to be a huge shift in the way that professional skincare brands are working with doctors, with spas, to really bring professional skincare to the forefront of their offerings, because this has proven to be a much more stable, much more recurring revenue stream, even when there are disruptions that are made have never been made more clear than in a COVID environment. This is really proven to be kind of a great mechanism to maintain that trust, to maintain that engagement between a physician, between an esthetician and the consumer, even when somebody isn't able to come in for a treatment. So I think this is kind of a golden era of professional skincare, as they really now have a brand new way to communicate with consumers, and they aren't really competing with other channels to provide kind of best-in-class product.
Thank you, Sasha. Mike, what are the emerging trends in device and the various companies you're seeing?
It's interesting. I'd be interested in your take, Grant, but from my perspective, I think the changes in Sasha's world have been much more profound over the last 5 or 10 years than they have in terms of the delivery of medical aesthetics. So I don't see that. By the way, there's somebody trying to say hello in the back there. I don't see that as haven't seen a big change in the business models there. I mean, what I'm more focused on, right now is, business levels, volumes, what's happening, from a revenue perspective. Everybody pretty much, went to zero back in March and April. Business is coming back nicely. I mean, HydraFacial has been growing, quite nicely. If you look at the publicly traded companies in terms of what they've been reporting, Qteras and so forth, the business is coming back. It's not back to where it was quite yet, but it's coming back. But sort of the nature of competition on the energy-based side of things, I haven't detected as much of a change. I think on the surgical side, maybe it's a little bit different, at least in breast implants, where patient safety is much bigger. It's always been a big issue, right, in breast implants, of course. But you're hearing a lot more about it now, right? You're seeing some countries outside of the U.S., shutting down certain surfaces in implants, which is causing some manufacturers to actually leave some markets. So that's a little bit different. There's definitely an interesting and obviously very positive trend to focus more on women's health in that market. That's a new and different.
Mm-hmm. So could we comment a little bit about the HydraFacial deal? I know it's not entirely closed yet, so I'm sensitive to the fact that you may not be able to say everything about it, but could you perhaps tell us what you can about the HydraFacial deal with Brent Saunders, who used to run Allergan?
Yeah, well, I mean, I think it's a great match, obviously, between Clint and what he's built and Brent and what he's built. I mean, Brent built the world's largest aesthetic medicine company, right? Mm-hmm. And I can't think of a better partner, really, than Brent, for Clint and his team. So it's a great fit. We love the business. The transaction hasn't closed yet, so there's not a lot that we can say about it, but there's plenty of, public information that's out there, the filings with the SEC and so forth. But we're getting close. And I think that transaction will be closed within, I don't know if you know exactly the date, Sasha, but 30 days or less from now, I think it'll be closed.
Yeah, I think what we can say about, and it was sold to Brent Saunders SPAC. What we can say about SPAC transactions, which is, especially in the investment banking world, a really interesting moment in time for this kind of asset class. What SPACs offer, and they're, special purpose acquisition vehicles, they're publicly traded. It's a blank check company that a private company can merge with that publicly traded vehicle and use that as a mechanism for going public. What great SPAC transactions, from my perspective, are you have a company that has, an inherent long-term competitive advantage that allows it to be, a successful public company that, is fulfilling a really unique market need in whatever kind of industry it is. And for HydraFacial in particular, I think that is it's a fantastic business that's really kind of at the center of both, Michael and Mai's worlds, where you're talking about a company that really is best in class in engaging with consumers, in providing them the, treatment that they want, the results that they're looking for, but packaging it and engaging with them in a next generation way. They're using social media, they're connecting online, they have unbelievable engagement one-on-one directly with their consumer, but they also have, a true device that provides a highly effective solution to a need, a facial treatment that cleanses, extracts, hydrates in 30 minutes, highly replicable, and provides a great profit point for any, place that puts that device in. So an esthetician can use that device to really provide, a better experience for her client that's coming in the door, and a salon or a doctor's office can use that to really, have a constant maintenance service that they can provide to their patients as well. So that, it has a really kind of fantastic place in the market where it's touching both ends of the spectrum and kind of sitting at the center of beauty health. And I think that's what is kind of the beauty of that company. What they also have is, a really fantastic management team. In more specifically, SPAC transactions are always looking for great managers that can really execute on the plan. And Clint and Leanne, they're excellent. And the last is a real partnership. And I think that that's what Brent brings to the table. Him and Clint have obviously have known each other in the space for a really long time. And I think that when you have those three things in any SPAC transaction, you're setting yourself up for success. And I think what we saw in that deal and what is available in talking to Clint, and you'll see in all of his public interviews, I think that there's a lot of potential for that partnership coming together. And we continue to think that that's going to be a really fantastic public company going forward.
I happen to agree with you. And as you probably know, Clint and I co-founded Orange Twist, and we've been friends for many, many years. Some people don't know what a SPAC is. You've kind of touched on it. Could you maybe elaborate a little bit more on what a SPAC is and what's so special about a SPAC? Just a little bit more for those people watching and listening who don't live in your world.
I'll start. Sasha,
go ahead,
jump in. So special purpose acquisition company, basically it's a vehicle that enables companies to go public in a different way, a slightly faster way overall in terms of the overall timetable, with much better early on assessment of feasibility. So, in an IPO, you develop a prospectus, you file, you go through the process with the SEC, you do testing the waters meetings, you launch a roadshow, and then it's the last day when you find out if you can actually do your deal, right?
Yep.
And that's at the end of a long road, a lot of hard work, and a lot of times you've got a good feel before that, but nonetheless, deals do fail on the last day. With a SPAC, you pretty much get all that done up front, and we don't need to get into all the mechanics of it. It's probably not that interesting at that level to folks, but you have a sense, really within 2 or 3 weeks of kind of coming to a general agreement with your SPAC partner, you have a sense for whether or not the deal is going to fly, because you go out and you raise, you do what's called a PIPE financing, which is a private investment in public equity. And if you're successful with that PIPE financing, which takes about 2 weeks, your deal is almost assured that it's going to happen on the terms that you agree to. And so that's a big difference. They've become a huge part of the landscape. So I think in 2018, SPACs were 20% of the kind of the total IPO volume, if you will. 2019, by 2019 it was 40% plus. In 2020 it was 57%. In the first couple months, this data is dated a little bit, but in the first 2 or 3 months of 2021, it's over 70% of IPOs. I think it's gonna, it's softened a little bit. Things are sort of sorting out a little bit right now, but it's here to stay. And it is it's an interesting, different way, not for every company, but a different way to go public.
Yeah.
You mentioned IPOs. What are the market conditions right now for IPOs? Is it that the IPOs are down and the SPACs are up, or are all the deals down, or that would explain it?
Everything's up, at the moment. Pretty much everything is working. I mean, SPACs were working, like crazy. There's a little bit of an adjustment going on in the SPAC world, but still working. The market's still working. IPO market, in my space anyway, Sasha can comment, in beauty, and medical devices, it couldn't be much better. And it's very, very strong. There's just a lot of capital out there, a lot of appetite for earlier stage companies. We haven't seen any aesthetics companies go public here in a while. But, we're there one that kind of had the right financial profile. I've no doubt that it would be successful. What is the right kind of financial profile, in your opinion? What makes a company right? Well, it changes. But historically, in medical devices, you typically like to see with an early stage company, a company that's got some revenue, maybe a $30 million run rate being the last quarter annualized. So a company that's, done 7, 10, $15 million in their last quarter, shows that there's a commercial ramp, does not need to be profitable. In fact, rarely is profitable and usually is not profitable for several years. So profit's not required. What's really required is revenue and revenue growth. And, the business, the expectation is, 30, 35% type top line revenue growth kind of in the early years. Could a company come public, earlier? Maybe, for the right story, I think it probably could. But in general, that $30 million run rate's a pretty good, bogey.
And
go ahead. I was just going to say that, especially with the SPAC market, because you're filing a proxy within a SPAC, you're able to provide investors with actual projections when you're filing for that SPAC, rather than not providing any forward-looking information. So the SPAC market has been great especially for growth companies that need to tell that need to tell a little bit more of their story to give comfort to the public markets. And I think that's been one of the great aspects of the SPAC market in providing companies that have a real growth engine, helping them to tell that story ahead of going public, rather than leaving it a lot more opaque in a traditional IPO.
Yeah.
So, Mike, did I hear you say 30 million is kind of an entry level? I mean, annualized 30 million. Was that the number you gave me?
Yeah, Great.
Yeah.
That was the number that I gave you. There are examples of companies within the past couple of years that have gotten public, shortly after getting FDA clearance, and so have had pretty close to zero. But if you say 8 out of 10 companies that have gone public over the last several years have probably been at that 30 million or north level.
And what kind of multiples are you paying on that revenue?
Well, the multiples at which companies are going public is different from the multiples at which they're trading right now. There's a big difference.
Right. I'm talking about going public, IPO, not trading.
So, most of the medical device, early stage medical device IPOs that have gone public at forward revenue multiples, like 1 year forward of kind of 6 to 8 times, 5 to 8 times. But when you look at where, the successful companies are trading right now, they're trading at 15 times, some of them 20 times. You go to China, you can trade at 200 times.
Jeez.
It's crazy. But there's quite a big IPO discount, although we don't really call it an IPO discount anymore. But with the early stage companies, you don't see them coming public at north of 10 times typically.
Is the same true for skincare, Sasha?
So beauty and personal care, I think there hasn't been as many kind of just pure growth plays in the public markets in beauty. We've actually seen a huge private market. The consolidators in beauty, Estee Lauder, L'Oreal, have been very aggressive in buying these fast-growing independent brands that have really they've really been changing the way that the consumer connects in skincare and makeup. Shiseido acquired Drunk Elephant. That was the fastest growing skincare brand at Sephora. I think what has been happening in the space for the last many years has been brands have really been driving growth especially in the specialty channel through kind of Sephora and Ulta. And what the consolidators in the space saw is that they had a lot of brands in their portfolio that were over-indexed to the department stores through legacy channels. And in order to maintain their growth, they've been acquiring these brands to help them move their business model, bring them into the next generation, help them with specialty, help them drive digital, help them kind of learn to engage with the next generations of consumers that are far more digitally engaged and are shopping in different places and in different ways than generations previous. So we honestly haven't had a lot of IPOs in beauty over the last few years. Some notable exceptions would be, Elf. Ulta has been a fantastic public company, but that's a retailer themselves. Those have been kind of the very limited number of IPOs in beauty over the last few years. What I think has been what is changing, and I think what's happening, especially in the SPAC market, there have been a number of SPACs that have been raised specifically by folks that are interested in building real platforms in beauty and personal care. This has been one of the areas of the economy that's been most successful in COVID, because skincare and more broadly beauty and personal care are really aligned with the kind of categories that have been doing well in this environment. They are sold digitally. They're aligned with kind of personal wellness, and they have continued to show a lot of growth, even with disruptions in retail. So there have been a number of SPACs that have been raised with the thought to create kind of a new next generation beauty platform. And I expect over the next few years that through these SPACs, we'll have new public companies that are specifically targeting the skincare space, also and beyond, because I think there is a lot of opportunity there's a lot of investor demand for this space, and not a lot of places where they can play on these trends.
What about the physician dispense skincare lines? Does that fall into your purview or Mike's? And how is that?
So we do it together.
You do it together. And
but
is it the same criteria?
Sasha understands that market, far better than I do.
Well, I'm sure of that, Mike. But but I'm talking about the financial modeling. So the physician dispense market of skincare, it's a little different product. It's a little different breed of horse, if you will. I'm curious, do you seeing any IPOs there or SPACs there, Sasha? On physician dispense?
I think there's a lot of opportunity in the physician dispense channel, but the brands themselves to date haven't gotten the scale. There's a lot of fast growing brands in the physician dispense channel, but I mean, if you want to be a successful public company, I think, and that requires, having the appropriate research coverage, having, the appropriate amount of liquidity so you can get kind of best in class investors in your stock, and they need to put, certain check sizes to work. So you can't be this like micro cap company in the space, or else you're just not going to get the attention that you need to be successful. So those brands are actually a little bit small right now to go public themselves. Can they be part of a complete kind of skincare portfolio that'll be providing a view of the entire spectrum of skincare, from kind of professional to, specialty, lifestyle oriented, down to natural, organics, clean? I think that would be really interesting, because there are pockets of consumers that are very interested in each one of these spaces, and there's a lot of growth there.
Interesting. And Mike said 30 million, and then you say that they're too small. I'm aware of a physician dispense company that's at 50.
I mean, you don't see consumer companies going public ever with 30 million of revenue. Never, right?
No,
right.
So
what would be a reasonable?
More like 150 to 200 million in sales would probably be a better place to start in consumer.
Okay. So overall, do you have any advice for the entrepreneurs listening to this program? We have a number of entrepreneurs, both physicians as well as entrepreneurs who love to watch the program. What sort of advice do you have for them looking to grow their brands or start a beauty business?
Well, I'll speak to
go ahead, Mike.
I think obviously having proprietary technology, some IP that protects your space, barrier to entry, that's sort of table stakes. That's tough to do, but that's very important. And then I think, because a lot of what we're talking about here is probably energy-based devices, perhaps not, but to the extent they are, the more recurring revenue you have, the better. The most successful medical aesthetics companies like Zeltiq and HydraFacial, they've been fairly rapidly got to a point where, the recurring revenue was over half of the company's revenue. I think that's a recipe for success. A pure equipment model, it's just tougher. It's not that it can't be done, but it's just tougher. It's nice to think about consumables and recurring revenue.
Mm-hmm. How about you, Sash?
Yeah.
Any advice?
Well, I think the consumables was a good transition to my piece. In terms of building a successful brand and maybe a successful skincare line, I think the key is, have a brand that really stands for something. Have, real technology in your products, have a real kind of image for your brand that the customer can identify. I think understanding kind of demographic changes and aligning your brand with very specific kind of niches of the market where you're targeting either a specific demographic of consumer, an age of consumer, and really targeting the way that you're speaking to them in ways that they speak themselves, is what really differentiates kind of real brands in the marketplace versus just, companies with a product. And I think the last thing I'd say is to really engage with kind of new technology. Understand that e-commerce trends are here to stay, and find ways to take your product and really build a mechanism where you are, really driving your digital business, engaging with the consumer on social media, selling your brand online, and continuing to build recurring revenue with those consumers. So it's not just kind of one-off, but you have real loyalty in your sales mix. I think that's a recipe for success.
Thank you. That sounds like great advice from both of you. So before we close, I'd like to ask both of you what you see in your crystal ball, say 1 year, 3 year, 5 year, or 3 year, 5 year, 10 years in this space, the beauty business, from each of your own perspectives. What's the future look like?
That's a really good question. Not easy to answer.
Oh, come on. I see that crystal ball there.
Look, I mean, I think at the moment there is a lot of interest in aesthetics, and all of us looking at ourselves all day on Zoom screens. People, you guys know this. People are much more conscious of the way they look, perhaps, than they were previously, and it's been one of the things that people can spend money on. I think if you go back over the last 20 years, Grant, and you'll know this, there have been cycles in aesthetics, right? In particular with energy-based. There have been periods of time where it's just really tough to sell capital equipment. We're not in one of those times right now. We're clearly in a time where, physicians are spending money and investing in their practices. You have to plan for, sort of hope for the best, plan for the worst, right? I mean, I think you have to expect that at some point something will happen. We'll hit a bubble. It'll be tougher to place capital. So that's out there. But again, to the extent that your business is much more built around, an installed base that has a very nice, stream of recurring revenue, you're going to be well positioned to, survive that and, potentially thrive. That's kind of my biggest concern really in aesthetics. And it's not something you can really plan for, except for trying to build a business that has as much of that recurring revenue as possible.
Sash, what do you see in the future in this beauty business?
In my crystal ball.
Yeah.
Look, I think it's a really exciting time for professional skincare, and I think there's a lot of really dynamic brands that are being built by dermatologists, by estheticians, that are coming to the consumer from a point of, real authority, and are providing really efficacious products, and they're speaking to them in a way that is unique and are really connecting. I think the bland doctors brands of yesterday are really coming to the forefront, and they're becoming incredibly interesting, interactive brands that are some of the most exciting brands in the market. So I think there's a lot of opportunity in professional skincare. I think it's only beginning to globalize. I think it's only beginning to digitize. I think there's a lot of growth on the forefront. So what I see is new kind of buyers coming to the table. These SPACs that have been raised, I think eventually they will become, new public vehicles, new platforms that are going to be there as buyers for fast-growing brands that are coming up. I think, there's a lot of opportunity for these brands as they grow to, build platforms themselves. And I think just generally, there's going to be a lot of innovation in the way that, professional skincare brands go to market. I think it's going to be a lot more reminiscent of what, just regular consumer brands did before. I think that all of those kind of marketing and trends that have already existed in, regular way lotions and potions that are sold at Sephora and Ulta. I think a lot of that is coming into professional skincare, and it's going to be an exciting couple of years. And I'm really looking forward to it.
Well, I would echo your sentiments, but I'd also point out that plastic surgeons are right there at the forefront also, Sasha. You said derms and estheticians.
I missed that
That's
one.
all right. I know, I'm
Plastic
kidding.
Surgeons
but
have a big role to play.
Yeah, there are a lot of active peptides in a lot of the compounds we're now using, and there's a lot of exciting research going on in the field of professional skincare, as I know you're aware of. And Mike also. Well, I want to thank you two very much for spending the time with us and educating us about your business. Are there any other things you'd like to tell us before we bid farewell on this Zoom call?
No, we just appreciate the opportunity, Grant. It's been a pleasure, and love to connect with some of the folks who watch your material. It's great stuff, and we're happy to be part of it.
And I'd love to have you back on the show sometime, maybe in a year, and we'll go back and look and see what other acquisitions you've done and the way in which you've affected our space, our aesthetic space. We also are enjoying huge growth in both surgical and non-surgical. And to your point, I think the reason I'm doing so many male facial procedures is just like right now, you're looking at your face and I'm looking at mine. Guys typically look at their faces 5 to 15 minutes a day. And now how many hours are you spending on Zoom calls every day? I mean, I don't even want to think.
5 to 15 hours.
Right.
I mean, it's so interesting the way that we have conversations these days. You used to just look the other person in the eye, but now you look at yourself looking at the other person and the person looking at you. It's a very different world. And I think that's only going to bring a lot more people into plastic surgeon.
It is. I'm doing more facelifts and more blepharoplasties than ever in my life. And I think people have the discretionary income because they're not spending it on travel. They're staring at themselves, and they're seeing their flaws, if you will, at least in their opinion. And they're taking an interest in themselves. They want to reward themselves because they've been in lockdown. And they come in and they want to invest in their own personal health and wellness. And part of that is looking better and feeling better because they look better. So I see a big growth coming ahead, and it's already been manifest in our offices, and I think it's a very exciting time here that we're in. So once again, thank you for joining us, and I'd like to thank all of you for joining us at the Technology of Beauty, where we get to interview the movers and shakers of the aesthetics world. Thank you, Mike, and thank you, Sasha. See you.
Thanks for having us.
You're welcome.
Look forward to our next conversation.
Yes, thank you very much. Bye-bye.